So looking at the investment in Chandler, explain with suitable calculations how goodwill should have been calculated, show the adjustments that need to be made, as well as any implications of the recoverable amount. So let's do it then. The acquisition of Chandler says work out goodwill. So I want the fair value of consideration, I want NCI, and I want the fair value of net assets acquired. I'm going to fill it in, I'm going to follow the scenario, see where it takes me. We bought 80% on the 1st of October X5. Okay, our year end is September X6, and that's the profits that it made for X6. But anyway, we bought it a year ago then. Cash consideration was 150 million. Super. 150. That's been included when calculating goodwill, so it should. Purchase agreement specified that a further cash payment of 32 becomes payable 2 years later, but no entries have been posted. Because of this, the discount rate of 5% should be used. So there should be some, shouldn't they? So we're going to pay an extra 32, and you divide that by 1.05 because it's 5% twice. Okay, and if you do that, it will come to 29. Okay, so 32 divided by 1.05 squared, so that's 179. It says tell me the adjustments, and obviously I'm explaining this is a future payment, and so it needs discounting down for the time value of money at 5%. Needs to be brought in at its present value. And to do that then, I would need to debit cost of investment or debit goodwill in the group accounts with 29 and credit liability with 29. So far, so good. In the goodwill calculation, the net assets was 170. Of this, 30 was for land, okay? However, a survey was received on December X5, which is 3 months, I think, after when we bought it. Revealed that the fair value was only 20, not 30. As it was received within 12 months, we take it into account. So the fair value of net assets acquired aren't 170, they're 170 minus 10 because it included 30, which should have been valued at 20. Okay, so it's in at 160. So I'm going to debit my goodwill with 10 and credit my, because it was caused by PPE with 10. The reason why I'm debiting goodwill with 10, obviously the less net assets, the more the goodwill is. Okay, no adjustments have been made to the goodwill calculation yet. The NCI was measured using the proportionate method at 34, but they worked out the 34 by doing 170 by 20%. Now I want to do 160 by 20%, so I want NCI to be 32. So I've got to reduce it by 2. So to reduce it from 34 down to 32, I have to debit NCI 2, and that will reduce goodwill, credit goodwill by 2. So there are my adjustments, and now I can finally deal with this. At the year end, the recoverable amount of Chandler was 250 million. No impairment has been calculated. So you always need to check for impairment. So you say, right, goodwill, I've just calculated it to be, I don't know what I've calculated it to be actually, so let's have a look. 179 plus 32 minus 160, calculated goodwill to be 51. Now, when it's proportionate method, I need to gross it up. It represented 80, I need to gross it up to 100. So I want to see what the whole of goodwill is. So times by 100 over 80, because I'm not doing proportionate method here. Well, I am doing proportionate, but I'm just therefore seeing what the full amount of goodwill would be, is 63.75. Then I want to know what the net assets are. I know they were 160, but that was a year ago. So what it would increase by is the profits for the year. So it would be 160 plus 52. So the net assets would be 160 plus 52. Didn't do it in my head, but anyway, 212. So in terms of S then, in the group accounts, 212 plus 63.75 is 275.75. But the most I'm going to recover, he tells me, the recoverable amount was 250. And so therefore I do need to reduce it by 25.75. However, I don't want to reduce 63.75 because I've only got goodwill in at 51. So I'm just going to reduce the 51 by, not by 25.75, but by 80% because I'd already grossed it up. Well, now I'm back down to that figure. So I just want to reduce it by 25.75 times by 25.75 times by 80%, which is 20.6. And so my double entry for that would be debit my income statement, wouldn't it, with 20.6, some operating expense, credit goodwill with 20.6. Okay, so talk about this, talk about that. I'm just going to gross it up, and if you're not clear why I'm grossing it up, is because I'm trying to compare like with like. That was 100% of S. This has got to be then 100% of S. So goodwill needs to be 100% of S, and at the moment that was just 80%. So I needed to gross it up. So I'm comparing like with like. Okay, that 250 there, I'm comparing like with like. And then once I get my difference, well, that difference was based on 100%, and I'm doing proportionate goodwill. So I just want a proportion of that impairment coming away from my goodwill.